Our next guest saying that the dip buyers came in for the sale yesterday, but will the buying continue? Joining us now, we've got here on set, live in living color, Kenny Polcari, Slatestone Wealth Chief Market Strategist. Great to see you here, Kenny, and thanks for taking the time. So, as we're thinking about some of the dip buying opportunities that some investors are trying to take advantage of right now, what are you kind of lining up and where you would be putting additional chips on the table?
So I think you have to take a broader look at where we think the market's going over the next 6 or 7 weeks, just because we're in that seasonally weak time of the market, August through October. I think that the August lows of 51.16 are likely going to be tested again, which means that, as an investor, as a long-term investor, you just need to be a little bit cautious. But look, key names, Nvidia, that's down 25% off its June high, is a place that I would actually be I would put money to work there now.
You think it rallies back to the high?
Yeah, well, I don't think it rallies back to the high, but I think it's on sale 25%. As a long-term investor, I'm not a trader, so I'm not looking for it to rally 2 points or 10 points and then sell it. I'm in there to buy it, to hold it, right? But when something goes on sale at 25% down off the recent high, then you have to at least look at it. Now, if you're worried about further downside for the broader market and you think it's going to get dragged with it, well, then just sit back a little bit and wait. I think, for most of the clients, that's the conversation I'm having just about being patient, right? Because patient in this case could be a virtue.
Kenny, what do you think the outsized influence is going to be for Nvidia looking forward for the broader market? And I bring that up because we were talking to Citi's Scott Croner earlier in the show, and he was talking about that shift that we certainly have started to see over the last couple of months. Does that continue?
Yeah, listen, I think it's a little bit overdone, that shift that everyone's worried about. Look, I think we're at the very infancy stages of AI. I think Nvidia sits at the nexus of this tech revolution that's happening. Nvidia, for me, is a key name, right? Now, do I think there's going to be fits and starts, and it's a high-growth name, so it's got lots of volatility in it? Absolutely. But over the long term, I think Nvidia is just a core name and a core portfolio. And I think investors have to depends again on who they are, what their time frame. Are they a trader looking to day trade it? Or are they an investor looking for a good entry point to either add to or initiate a position?
We're looking at consumer discretionary this morning, one of the leaders here, and it's jousting with technology right now here, at least during today's trading session. When we think about the consumer, though, right now, there have been flashing warning signs, especially ahead of what is either going to be a soft landing, a hard landing, potential recession. Right. How should investors be thinking about the consumer with relation to some of that discretionary spending and the stocks that will show up in?
So to that point, I'm much more about consumer staples than I am about discretionary, because I think the consumer is stretched. I think the consumer is going to run into problems. I think we're already seeing consumers run into problems. We're seeing people live on credit cards, and discretionary is just that. It's discretionary spending. Those are wants versus needs, right? So I would be cautious on that sector at the moment, and I'd be more focused on the staple sector. While it's boring and not sexy, I think it plays nicely in an environment where you think it's going to be a little bit of a pressure on the broader market and on the consumer.
So, Kenny, then what does that tell us about your view then of the overall U.S. economy and whether or not maybe some of that slowing of the growth that we have seen, that continues?
I think that does continue. And by the way, I'm not necessarily against the slowing of the economy, because I think a lot of it was juiced up because of the injection of monetary policy injection as well as fiscal spending. I think a lot of it. So I think the economy has to slow a little bit. And by the way, I wouldn't even mind if we had a little bit of a mild recession, not a deep one, because a mild recession will reset it, right? You'll see prices actually come down if we have a mild recession. Right now, prices while inflation is slowing, prices are still rising. But if you have a recession, then you'll see the prices of things that we care about, food, energy, utility bills, will all start to come down a little bit. So I'm not necessarily in the camp that we shouldn't go through that cycle.
So then what does that tell us about the positioning of small caps right now? Because that certainly has been some of the trades that we've been hearing a little bit more about, but continues to lag.
Right, but small caps will typically benefit. If rates go lower, small caps will typically benefit because they end up using and borrowing a lot of money, right?
But even in a slowing economy?
Well, so there's the rub, right? You just have to be a little bit careful in terms of which small caps kind of you're looking at, what space they're in, right? Because they could be small caps in a range of sectors. And so you have to, I think, just be a little bit cautious on which names you're looking at. But overall, I think we're in for a semi-soft landing. Not a hard one, but I don't think it's going to be completely soft. And so therefore, I think you just have to be conscious of your time frame, where you are in the life cycle, where you are in the investment cycle, right? If you're 30 years old, it's a very different conversation than if you're 60 years old, right? In terms of how you want to be weighted and where you want to have your exposure.
So wouldn't that mean then that the economy is actually more resilient than markets are pricing in right now? I'm looking at a note from BlackRock saying U.S. earnings growth are broadening beyond early AI winners.
I think the economy is fairly resilient, right? I don't think we're going over the edge. I think all this panic about we need 50 basis points because we're going over the edge, I think that's baloney. Because I don't think we're going over the edge. And like I said, I think actually a slowdown would be better for the economy long range, because we can't keep going at the pace we were going. Because then if we do, then the correction is going to be even more difficult, right? And so I would actually welcome a little bit of a mild recession.
All right, Kenny Polcari, always great to have you here on set with us. Thanks so much for taking the time
to be here.
to join us this morning. Kenny Polcari of Slatestone Wealth.